Alright, welcome to my YouTube channel at Illumination of NG. So don't forget to subscribe to the YouTube channel and also click on the notification bell so that you can be notified whenever I drop a new video. So today we're going to be looking at interlocking and integrated accounting system. Okay, so we're going to be looking at the cost bookkeeping, ledger account, control accounts, and also the reconciliation of financial and cost accounting profit. Okay, so what are the objectives that we're going to be looking at? We're going to be looking at studying the post-cost accounting transactions and posting them into the appropriate book of accounts. And all these transactions are going to be posted into the various books of account. Okay, the cost accounting transactions, we're going to post them into the appropriate books of accounts. And also, we're going to apply the double entry principle in cost accounting. Okay, and we're also going to look at the difference between interlocking account and also we're going to look at integrated account. And likewise, we're also going to look at how to reconcile the financial accounting profit and the cost accounting profit. Okay, so also we're going to understand or understudy the design of accounting codes in summarized and spirit form for asset management purposes. Okay, so lastly, we're going to be explaining the application of computer assisted techniques, okay, when it comes to the interlocking and integrated cost accounting. Okay, so what do we mean by interlocking and integrated cost accounting? So before we explain what interlocking and integrated cost accounting simply means, we have to go back and look at what bookkeeping entails. Okay, because right here we're trying to explain how to keep cost accounting records. Okay, so bookkeeping in this sense is the process of identifying, recording, and summarizing transactions in the appropriate books of accounts. And this balance are extracted to the trial balance as at the period ended. Okay, so this applies to both financial accounting and cost accounting. Okay, now there are some factors that determines how we keep our books. Number one, the size of the business determines the complexity of cost records. For some small businesses, simple records are not linked to financial records. Okay, so they are for larger businesses, we have full cost accounting being carried out and supporting with the financial total. Okay, now also we are looking at transactions being posted to the books of accounts. Okay, and from the books of accounts being posted to the various ledger or trial balance. Okay, so let us quickly also look at what interlocking simply means as an accounting system. Okay, in cost accounting. So interlocking is simply a system that uses separate cost accounting methods, okay, which are periodically reconciled with the financial account. Okay, so the various cost accounts that are being prepared, okay, based on their various methods, okay, are reconciled with the financial account. From the word interlock, that is to merge, okay, to couple, okay, or to merge together, okay, or to synergize. So we're trying to synergize the cost accounting transactions with the financial accounting transaction. We know that cost accounting does not comply with stated accounting standards. Okay, likewise, financial accounting complies with stated internationally recognized financial accounting standards. Okay, so what we're trying to do now is to merge the two together, to marry them together in line with the various principles. So the cost accountant draws an information, okay, and also use what this cost accounting information day-to-day basis, okay, for record keeping purposes. And this information is also used by financial accountants too. When it comes to the issue of sales being made, policies being made, productions made during the year, overhead costs incurred, labor cost, rental cost, both the capital cost and the expenditures incurred on a day-to-day basis. Okay, so we also look at the payroll. Accountants also use to look at payroll when we're looking at the labor cost. Okay, so when we look at labor cost in cost accounting, we're going to be looking at the payroll computation in financial accounting. So In this case, interlocking, for us to be able to interlock, okay, to interlock with the cost accounting with the financial accounting, we are going to carry out two control accounts, okay. We're going to carry out two control accounts, which is the cost ledger control account and the financial ledger control account, okay. This cost ledger control account will be managed within the financial ledger, while the financial control ledger control account will be managed within the cost ledger. So we're going to look at how to achieve this when we get to where we're going to be doing some computations, okay. So let us quickly look at the cost ledger. So when we're talking about a ledger, so to layman who is studying accounting, we know that a ledger is simply a book or a principal book of accounts from which all transactions are posted, okay, and transferred, okay, to the various trial balance, okay. So the ledger is simply a principal book of accounts whereby we have all postings from the various subsidiary books or books of primary entry are transferred, okay, to this account, which we regard as the principal book of accounts, okay, which is then further transferred to the trial balance, which serves as a list of schedule of all the debit and credit balances extracted, okay, from the ledger account. Okay, so now the principal ledger is an interlocking account, no doubt. This ledger is an interlocking accounting system, and it generally contains, number one, the control account. We know the control account. We have the trade receivable control account. We have the trade payable control account. Okay, so we have we also call it the sales ledger control account. We also have the policy ledger control account. So for stores, we have work in progress, finished goods, and overhead. So each are supported by a subsidiary ledger for detailed control. Now we also have the operating accounts. The operating accounts talk about those transactions that occur during the time of operation, okay, within the organization. We're talking about the wages, we're talking about sales, we're talking about cost of sales, and any other account needed in cost bookkeeping, okay, e.g. the notional charges as well as the suspense account, okay. And lastly, we also have the cost ledger control account. You know, we have the control account where we need to set up some transaction, okay, also called general ledger adjustment account, okay. It maintains a double entry principle by posting items that affect accounts outside the costing system, e.g. the debtors and the creditors, as well as cash accounts. Please take note of all these terms, okay, when your ledger account. What about the work in progress ledger account? Okay, now the focal point of the cost account system is simply carrying out a specific order costing, and a separate account is kept for each of the jobs. Okay, now when we're talking about specific order costing, we're talking about the job costing, we're talking about the process costing. So now, what we need to understand is that when it comes to the issue of the work in progress ledger account, okay, we know that we're going to use a material, and wages are allocated, overhead are also absorbed. The work in progress control account is created. We have the finished goods ledger, and we have the cost of sale. Now each job account is debited. We have to debit each job account, okay, with material cost, wages allocated, and overhead also absorbed during the period, okay. Now on completion, cost is transferred, or cost is transferred to the finished goods ledger, okay. Now on the cost of sales is debited. On delivery, cost of sales is debited. That's an expense, okay. We debit the expense and we credit the income, okay. So cost of sales is debited with the job cost, and sales is credited with the selling price. Now we credit sales, okay, and we debit cost of sales, okay. Now a costing profit and loss statement can then be prepared and analyzed job by job, okay. So at the end, we're going to prepare a what we call a costing profit and loss statement, okay, such as we also have the income statement, where we profit or loss, okay. And this is what are prepared, and we analyze them based on these various job specifications that were carried out within that organization at the period in time, okay. Now, what are the cost accounting entries for materials? So when we look at materials, these are raw materials, okay, items that are being transferred from the primary sector, okay, to the processing sector, whereby we need to transform this material into another form of product. Okay, so the relevant entries under the interlock system in regards to materials. Okay, up to the work in progress control account. Okay, we have what the various transactions that has to do with materials being incurred, costs incurred on material during the accounting year. Okay, there are ways in which we're going to recognize them in the various cost accounting books. Okay, so now most of what we got the raw material control account, or what we call the store ledger control account. Okay, that's purchased. Okay, from the wherever, maybe from the distributor, or maybe the seller, okay, or maybe the farmer, those are within the farmer sector. The raw material that we collected from them or purchased from them, we're going to debit. Okay, now we're not going to credit the cost ledger control account or general ledger adjustment account, which also known as the account. Okay, so we're going to credit the cost ledger account with the cost. Okay, we credit the cost ledger account with the cost, and we're going to debit the raw material control account. Okay, now also we're going to debit the cost ledger control account. Cost ledger control account, okay, or the general ledger control adjustment account, okay, with the materials that are returned, okay, to the supplier. When we return the material to the supplier, okay, we're going to debit the cost ledger control account. Okay, and in regards to the raw material control account, we're going to credit, okay, for any materials that we return to the supplier. So we debit the cost ledger control account, and we credit the raw materials control account for any materials we return back to the supplier. That is, you debit the receiver and you credit the giver. Okay, so we are crediting the giver, we're crediting the raw material because we are transferring this goods back, we're returning it back to the supplier. It can be due to so many reasons. Maybe it doesn't meet the specification, it's not of the right quality, it's not what we needed, okay, it's not of the right color, etc. Okay, so now also we are going to debit the work in progress control account and the production overhead control account. Okay, for the material issued to production, we're going to debit the work in progress control account, okay, and the production overhead control account with the material issues to the production. Okay, and likewise, we're going to follow the double entry principle. We're going to credit the raw material control account. So this is how we're going to carry out the various accounting and transactions. Okay, so for wages, we know that wages is simply an expenses. Okay, and it is a charge against profit. Okay, so for wage transactions in the cost account, okay, we're going to debit wages control. We're going to debit the wages control account as an expense, and for days incurred, and we're going to credit cost ledger control account. We debit the wages account and we credit the cost ledger control account, and also we're going to debit the work in progress control account and the production overhead control account, okay, with the wages allocated to job factory. Okay, and likewise, to follow the double entry principle, we're going to credit the cost ledger control account, okay, with the same figure. So now, please kindly note that direct wages are debited to work in progress, and indirect wages, it is supervision, and debited to production overhead control. Both are credited to the cost ledger control account. This is how we're going to treat the various entries in the various control ledger control credit cost control account. Okay. So let us quickly look at the entries when it comes to absorption. Okay, so these are indirect costs, okay, incurred or generated by a production unit. Okay, so overhead and outgoing. How do we treat overhead? Okay, now what we're going to do is that we're going to debit the work in progress control account for production overhead absorbed. Okay, we are absorbing the production overhead. We're going to debit the work in progress control account, and we are going to credit the production overhead control account, and also we're going to debit the finished goods account with the output achieved during the period. And also we're going to credit the work in progress and control account with the output achieved when the job was completed. Okay, so an adjustment entry is made where overhead is under or over absorbed. Okay, the difference is written off to the costing profit and loss account. So in our next video, we're going to be looking at illustration. We're going to be doing some workings, okay, and we're going to see how we can post these transactions into their various books of account. Okay, now let's look at this illustration here. We have an incomplete cost account for a manufacturing business. Period end final accounts. We have the raw material control, we have the work in progress control account, we have the finished products control account, we have production overhead control account, we have the wages and the others as listed in the image that we can see here. Okay, missing images, missing entries are labeled 1 to 9. Okay, so that is raw materials 1, work in progress control 2. So we want to what? We want to be able to identify and complete these labels. Okay, so we also have this illustration here, 6.1. Okay, additional information. Closing inventory balances. We have raw material 18,000. We have work in progress control 60,000. We have finished good control for 5,000 naira. We have direct wages and indirect wages. The ratio of direct wages to indirect wages is 11:2. We have marketing and admin overhead absorbed at 5% of cost of goods sold. Okay, and we have the production overhead absorbed at 350 per indirect labor hour. Total hours work equals over 22,000. 22,000. Okay, so we are now required. Okay, this question we are looking for ACC. We are required to identify the direction indicated by entries 1 to 6. Complete the cost account for the period. Complete the cost account report for the period, and also prepare the trial balance as at the end of the period. So thank you. In our next video, we're going to be looking at the workings. We're going to go proper into the workings. We'll do some work on the board, okay, and we're going to explain how we arrive at our answer. So thank you very much for your time, and don't forget to subscribe to the channel and also click on the notification bell so that you can be notified whenever I drop a new video. So see you in the next video where we're going to treat these questions and other examples. Thank you and God bless you. So do have a wonderful time and a great day also. So don't forget to share my videos and also follow my YouTube channel at the Illumination of Energy. Thank you and God bless.